next story, I'm going to be looking at tech stocks that are hitting the news. Intel drops a bomb on the 5G network. Intel has announced a complete portfolio of 5G network infrastructure silicon. Snow Ridge, Atom 20, blah, 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 blah. All of a sudden, networking will become a $25 billion market by 2023, and it was a $5 billion for Intel in 2019. Now you understand how these tech stocks are really moving into the realm of 5G and at a high rate of speed. So I wanted to look at what these tech companies were doing. That's one with Intel really ramping up for 5G. Let's go look at Microsoft. Microsoft, though, drops after the coronavirus-related outlook warning. So now not only is coronavirus affecting the economy to the point where the Fed dropped the interest rates, but more and more companies are going to come out like Apple did and say that, you know, we're guiding lower for the upcoming quarter because coronavirus is affecting us in a bad way. Microsoft doesn't expect to meet its third quarter guidance for the more personal computing segment due to the coronavirus-related impact to the Windows operating system and Surface. The company had guided 10.75 to 11.15 billion in revenue for the segment. The rest of Microsoft's guidance remains unchanged. So it looks like from the computing standpoint, the personal computing standpoint, Microsoft is feeling the effects due to the coronavirus. And we're going to go to another one. How about Apple? Chart shows S&P bounce may be ephemeral, but Apple poised to rally. Everybody knows that Apple is my favorite stock, right? And this is from Jim Cramer. No matter what you say about Cramer, I think Cramer is a smart individual. I do understand that he is an entertainer. All right, I do know that. But he's got a lot of market savvy behind him. And, you know, the charts is interpreted by Carolyn Borodin suggest that some stocks might be a safer pick here, like Apple, but the broader S&P 500 might not be out of the woods yet. So the Apple stock could be poised to rally 20% if it can break through a key ceiling of resistance. We're going to take a look at Apple. So that's also another tech stock. Let's go to one more. Still Apple, but Apple's supplier now. Apple supplier Skyworks cut forecast on the supply chain hit. So not only is Apple getting affected adversely to coronavirus, even though the prior story said that Apple could be poised for a 20% rally, but any stock dealing with Apple is feeling the effects as well. So let's take a look at these tech stocks. Let's go back to the software. Let's take a look at the tech stocks. Here they are. Microsoft is one of them, Intel is one of them, Apple is one of them, and Skyworks is one of them. Let's analyze them real quick. This is the power of using the VectorVest software to corroborate the story that whether it's Cramer or whoever gives, right? Microsoft trading at 167, a value of 111. For those of you who are new, value is what we feel the stock is currently worth. We look at earnings. We look at earnings growth rate in order to evaluate what we feel the stock is currently worth. It is not a price target. It's what we feel the stock is currently worth. Microsoft is currently trading over its value. We look at Intel is currently under its value. Our mantra is to have you in safe undervalued stocks that are rising in price. Now, because the stock is overvalued doesn't make it a bad stock. It means that people are willing to pay a premium to own the stock, and if enough people are willing to pay that premium, it will drive the stock's price higher. All right? So we're going to analyze it a little further to still see if these are what we like to call, what's the word I'm looking for? Glamour stocks, all right? Stocks that are overvalued but still have upside potential. Apple, currently slightly over its value, and Skyworks under its value nicely. Not a ton, but nicely. Now let's look at our indicators, RV, RS, RT, VST, CI. All of these indicators are cast on a scale between 0 and 2. We make it real simple. If the indicator is above the value of 1, it's favorable. If the indicator is below the value of 1, it's unfavorable. That makes it real simple to understand the value of these indicators. Now, relative value looks at a stock's long-term upside potential. Its potential as compared to an alternative investment in a AAA corporate bond. Layman's term, will this stock over the next 1 to 3 years outperform a AAA corporate bond? You buy a AAA corporate bond, it matures, you get it all back with a little interest. So it turns out to be a pretty safe investment. But I want to determine, do I want to hold that AAA corporate bond over the next 1 to 3 years or the stock? Well, Microsoft's got a relative value of 1.18. This tells me that Microsoft should outperform that AAA corporate bond by 18%. I wouldn't mind holding that stock longer, even though the stock is overvalued. This now becomes a glamour stock. The next one, Intel, undervalued, upside potential good, 1.37, should outperform that AAA corporate bond by 37% over the next 1 to 3 years. Apple, slightly over 1, should still outperform that AAA corporate bond. Skyworks, on the other hand, below the value of 1, the AAA corporate bond might be a better play long-term than owning Skyworks long-term. Safety, notice though, all of these stocks are safe stocks. They're all above the value of 1. These are stocks that have the consistency and predictability of company financial performance. Do these companies meet or exceed earnings expectations quarter over quarter, year over year? The next indicator, RT, tells me if the stock's in an uptrend or not. Microsoft, in an uptrend. It's above the value of 1. Intel, not in an uptrend because it's below the value of 1. Apple is in an uptrend, Skyworks is not. And then I can see which ones of the stocks are sell recommendations. It looks like Skyworks is the only stock that has a sell recommendations. The CI, or Comfort Index, looks at a stock's ability to withstand long and lengthy price declines. Above 1, the stock goes up in price more than it goes down. And last but not least, the growth. Are these companies growing their earnings? And how about Skyworks, who have below relative value, not moving up in price, does have a VST of 1.06, but look at they're growing their earnings at a negative rate. So let's do one last thing. Let's take a look at these stocks. Okay. Which of these are the best plays in this field? Well, Microsoft, let's put this, I do like over the last year, Microsoft looks good. Has it been affected by the coronavirus? Yes, it has. But look at the beautiful move of the stock over the last year. Look at the earnings per share. Earnings is the engine that drives the stock's price higher. Look at the earnings per share and doing so on big volume. But coronavirus has hit it. Looks like it might have found a floor or level of support bouncing up. I'm not ready to touch that yet. Looking at Intel, also coming off a level of support. Not ready to touch that yet either. Looking at Apple, man, Apple is coming up off of the floor a little quicker than the other two, but not ready to touch that yet either. And Skyworks, definitely still moving down. So out of the 4, now you know why they made the news. The coronavirus is affecting all 4 of these stocks in an adverse way. Probably not the right time to touch these stocks. Just wanted to show as they hit the news that we were able to corroborate the story that these are being affected by the coronavirus in the VectorVest software.